Welcome aboard for another Agriculture Today on the K-State Radio Network. It's our Friday edition. And so first off, we get into the grain market scene. Plenty to talk about there with Research and Extension grain market economist Dan O'Brien along with us. Dan, the headliner here without a doubt, and most assuredly in the state of Kansas, the wheat market is off to a woefully rocky start here in 2022. And this amidst tight world supplies, which has more than a few interested parties curious about what's going on here.
A lot of back and forth information that had come out regarding the soil moisture conditions in Kansas that would be interpreted very positively, price-wise, negatively in terms of production prospects. Report came out on out of the USDA on January the 3rd, out of the Kansas offices, that topsoil moisture rated 34% very short, 38% short, and 26% adequate, and 2% surplus. So 28% adequate to surplus, and everything else, again, 34 plus 38%, you're looking at 72% short to very short. And of course, the growing crop we have right now would be winter wheat. And you can see this same situation on our moisture maps, drought monitor maps. Just really a dry situation. And these numbers aren't looking at the area up to the north of us, where we've got hard red spring wheat, durum wheat concern, and white wheat concerns also. So some real issues on the positive side in the wheat market. On the negative side, positive side price wise, challenging in terms of actual production. But the issue that has concern of wheat producers and their organizations in the state and nationally would be the very low export numbers that we've had so far. And part of that, a good chunk of that, has to do with high prices and where competitors are in the world markets. I think the downside that just occurred is casting off concerns we've had in the last couple of weeks about potential Black Sea region geopolitical issues. I think in the last day or so, we've focused specifically on, hey, we've got really low exports for U.S. wheat so far, and focusing on that, and had decided not to look at the factors we were looking at prior to that. Again, looking at Ukraine, Russia, what disruption there could do to export flows, and having that uphold the market. So I guess in all of that, we've just got a lot of roiling and uncertainty in the market in the last day or so that's led us to see prices drop a bit of late. And when you look at the March contract, it had been at highs almost up to $9, about $8.90, $8.95, something like that. And that had happened in November. We had come down to about $7.75, back up to $8.75, down here on yesterday's close to $7.68.5. And part of the silver lining for those prices coming down like that probably is a trend towards the place where U.S. wheat now will be more attractive to buyers. Each dime that price goes lower, you're potentially going to attract more business. And so it just brings up the question: what would we consider a low wheat price right now? Well, if we're sitting at 768 and a half, and if we don't start giving impetus to some wheat export sales at areas like that, well, where do we need to go? Down to 650? When we were having these types of discussions in past years, we'd have 3s and 4s in front of those instead of 6s and 7s. So I think overall, we still have this situation in the world that, as we crunch the numbers, and by the way, we have another WASDE report coming up on Wednesday, where we'll get a new set of world numbers for wheat. And when you look at wheat supplies outside of China, world wheat supplies everywhere, we're at the lowest level we've been at, I think, since about 2007. Mm-hmm. So we still have a very tight situation in the world, and have stood up, looked around, and seen that we are really not having a lot of wheat exports right now in the United States with under high prices. Well, we're heading towards somewhat of a moderation in those high prices. And if you're a hard-bitten old market economist like me, you'd think, well, within the not too distant future, we'd start to bring about some sales and to shift that situation around, given that there just aren't that many other places in the world that have wheat available, that have food quality wheat available. Australia has a lot of wheat, but they have a lot of damaged wheat too. That's basically feed quality. So we'll see where all this goes. I think as objectively as I can state it, the overall situation is still tight in the world, and we've had this delay that's probably temporary based on a lot on high prices. Well, now that we're moderating prices, let's see where we're at in the next 1 or 2 weeks.
Well, you can chalk this up as inherent to a volatile market in times of high prices. Let's hope that it returns to the higher levels we've seen recently up until this week or so. Now, the corn market, to get 2022 rolling, Dan, actually has been in a very steady state to the upside, right?
Yes, we'll have that major report or set of reports coming out on the 12th. It'll be, yes, the World Ag Supply Demand Estimates reports, but also the annual crop production summaries. And if the USDA sees any major changes in acreage or in yields and production for corn, soybeans, grain, sorghum, it will come out in that report, because they literally do a comprehensive resurvey of everybody. There wasn't much of an effort. There was no effort in the December report to resurvey folks, but the USDA sort of hangs its hat on this report. It doesn't mean it can't change later on, because it has in the past. They've come in later off of stocks numbers and made some changes to these things. But generally, the market takes in these January, this year will be January 12th reports, and they'll say, okay, we've answered the supply question. And then they turn their attention to usage. So there's potential for volatility in this coming out of those of that day. So Wednesday the 12th is a big day for anybody. And but coming into that, as you'd mentioned for corn, when we look at corn futures, they have been hanging around basically around $6, and not really that terribly volatile, not a lot of deviation around that. There's been an uptrend for about the last 4 or 5 months since September heading into October, not high volatility in corn, still moving to the higher side. Relative strength index, which is a measure of momentum in the market, anything above 50% is generally positive. Well, we've got an RSI of about 58 to 60 thereabouts. Rate of change in prices on a weekly basis in the last week up about 14% over time in terms of an average of rate of change for corn futures. So that's been on a positive. And when you look at the soybean futures, which along with general positive support, you've got dry conditions that were reported out of South America and southern Brazil, good chunks of Argentina, that have been one of the major factors in recent strength. So in the soybean market in particular, but also in the corn market. So you look at the same type of trends in the soybean market, almost identical. Again, 14% rate of change in that market on a weekly basis, going up higher. RSI about 61, a little higher than corn. If anything, a little more volatile because of that soybean crop directly affected in South America, whereas if moisture is short, there it could affect the second crop corn, which is a little more distant. Anyway, point being that now you're trading at soybeans at about 1375 to 1390, closed yesterday 1387 and a half. So we see some pessimism in terms of recent trends for soybeans, for wheat, but particularly hard red winter wheat. But when you look at corn and soybeans, things are looking strong, and a fair chunk of it's weather market being weather watching in South America.
It does broadly, though, come back to the fact, Dan, that we will see the kinds of, well, rather dramatic swings from time to time in these markets, given the supplies conditions relatively, and the fact that these market swings in the whole aren't as stark as they would be if we were back in the $3, $4, $5 range for corn and for wheat and $7 for beans.
Market sentiments are acting and reacting to news in the market that may change the sentiments for production and supply demand balances in some positive or negative way, i.e. larger or smaller. And so with that, we see this, we see some very, very strong, and I think we can unapologetically say that corn prices in the around $6 is a tremendous level. We've been higher at times, but here we are, January heading towards February, and we've got $6 corn. A lot of times we're just struggling to see any light at the end of the tunnel at all for that. And for soybeans, in a lot of years we've had pretty good prices for beans, maybe more than corn of late, but still we have beans in the teens, and it's not even anything out of the ordinary. We're just up there. I would add in just real quickly that of course we try to watch grain sorghum closely too. Grain sorghum prices, cash prices across the state ranging from a low $5.99 in a location we watched down in southeast Kansas, Columbus area. That's the low. The high is $6.63 at Topeka, Garden City at $6.14, $6.53. Salina, Colby, $6.24, Hutchinson, $6.38, tremendous prices. And, corn prices not far off of that, off that same situation. So anyway, strong feed grain cash prices, very strong soybean spot cash prices. Again, they're all across the state at the locations we're watching, the 6 primary ones, all above $13. For wheat, even with the weakness of late, we still have cash wheat prices at low of 7.18, high about 7.58 across these major locations. So still great prices, but some short-term trends that have our attention in terms of what, and really determine whether we feel good or not so good about what's been happening the last couple of weeks.
Dan's notes on the grain markets, of course, are right there for your review. Producers weekly updated on the agmanager.info website. Take a look. Dan, we'll talk again next Friday. Many thanks for now.
Eric, take care.
On the grain markets, grain market economist Dan O'Brien, K-State Research and Extension, from his office in Colby, Northwest Kansas. We'll be back on Agriculture Today.